Well, in Morgan Stanley's latest India strategy note, they're actually favoring India. What they're clearly suggesting is that it's hard to argue an investment case against India. So they're currently overweight India. What they're suggesting is that though one must be wary of volatility going forward, because there are several factors which will influence volatility, and there are several event-based factors which will influence volatility going forward over the next year or so, especially in 2024 calendar year. Of course, we have the main event, which is the central election. We also have the likes of the US possibly marginally withdrawing rates, so reducing their federal funds rate. There's also oil prices, which will determine the direction of the market, and the balance of payments for India currently looks actually favorable, and in 2024 is expected to get even more favorable as Indian bonds are part of the JP Morgan bond index inclusion. So therefore, currently it seems the market is buoyant. There's a majority government which is currently already being priced in according to Morgan Stanley, and they're forecasting a 21% earnings growth compounding on the Sensex all the way to FY26. This is roughly 10% higher than the consensus estimate. So that's the other possible risk to what Morgan Stanley is factoring in. Further, with regard to sectors as well as with regard to market cap, they prefer cyclicals over defensives at this point of time. They're also preferring large caps over the small and medium cap universe at this point of time. They're overweight when it comes to financials, consumer discretionary, industrials, and technology. And they're currently believing that the macro market, it is going to be a macro market over a stock pickers market. That's what they are suggesting, and the macro market trade could possibly peak in 2024. That's all on the Morgan Stanley strategy note.